There's a specific, terrifying concept in astrophysics known as the Schwarzschild radius. It is the point where a star becomes so heavy, so dense with its own gravity, that it collapses in on itself. Once you cross that invisible line, known as the event horizon, escape is mathematically impossible. No amount of energy, no amount of speed, and no amount of struggle can save you. The laws of physics take over, and the outcome is inevitable destruction. Today, on December 2nd, 2025, the United States of America has officially crossed its own financial event horizon. For 40 years, mainstream economists and politicians told us that the national debt did not matter. They told us that because we owe the money to ourselves, we could simply print our way out of any problem. They coined phrases like modern monetary theory to justify spending money that did not exist. They lied to you, and now the math has finally caught up with the lie. As of this morning, the official United States national debt stands at $38 trillion. That number is so large, it is almost meaningless to the human brain. To understand the scale of this trap, you have to visualize it physically. If you stacked $38 trillion in $100 bills, the pile would reach 3,000 miles into the sky. It represents a theft from the future so massive that our great-grandchildren will be born into indentured servitude. But the total debt number isn't even the thing that should keep you awake at night. The thing that kills an empire is not the debt itself, it is the interest on the debt. Because the Federal Reserve was forced to keep interest rates higher for longer to fight the sticky inflation of 2024, the cost of servicing that $38 trillion mountain has exploded. In the fiscal year 2025, the US government spent $2 trillion just on interest payments. Let that number sink in. $2 trillion a year. This is not money paying down the principal. This is not buying down the debt. This is just the minimum credit card payment to keep the lights on for another 12 months. We have now reached a terrifying milestone in American history, a point of no return. The United States now spends more on interest than it spends on the entire national defense budget. We spend more on interest than we spend on Medicare. And as of last month, we now spend more on interest than we spend on Social Security. The interest on the debt has become the single largest line item in the federal budget. This is what economists call a debt death spiral. Think about how a government pays its bills. It relies on tax revenue from you, the citizen. But to pay that $2 trillion in interest, the government simply does not have the tax revenue. Tax receipts are falling as the real economy slows down under the weight of inflation. So how do they pay the $2 trillion? Where does the cash come from? They have to borrow it. They have to issue $2 trillion of new debt just to pay the interest on the old debt. It is a Ponzi scheme of global proportions. It is exactly what Bernie Madoff did, but legal, and on a scale that threatens the entire world economy. And, like all Ponzi schemes, it works perfectly right until the moment the new money stops coming in. That moment has arrived. The world has realized that the United States is mathematically insolvent. Look at the warning signs flashing around us right now in December 2025. Gold has crossed $4,000 an ounce. Bitcoin has smashed through $92,000. These assets are not going up because they are becoming more valuable. They are going up because the dollar is collapsing against the weight of this debt. The market is sniffing out the insolvency. Investors are voting with their wallets, and they are voting no confidence in the US Treasury. This brings us to the mechanism of the crash, the bond market. For 40 years, we had bond vigilantes who would keep the government in check. If the government spent too much, the vigilantes would sell bonds, forcing interest rates up to punish the politicians. But today, the vigilantes are gone. They have been replaced by something much worse. The buyer's strike. Nobody wants to buy 30-year US debt when inflation is eating the value of the dollar. China is selling. Japan is selling. Saudi Arabia is selling. So who is the buyer of last resort? Who is the only entity left to buy the debt? The Federal Reserve, and they only have one tool to buy it with. A printer? We are standing on the edge of the yield curve control trap. A scenario where the Fed has to print trillions of dollars not to stimulate the economy, but just to prevent the US government from defaulting on Tuesday morning. This is the end game. The trap is set. The math is undeniable, and the clock has run out. In the next part of this documentary, we are going to look at the specific trigger event that will freeze the credit markets in 2026. And we will explain why your bank account is directly in the line of fire. The US Treasury bond market. This is the bedrock of the entire global financial system. Every asset in the world, your house, your stock portfolio, your pension, is priced based on the risk-free rate of the US Treasury bond. For 40 years, the world accepted a simple lie. US debt is risk-free. They believe that because the US government can print money, it can never default. But in late 2025, the bond market woke up to a new reality. The reality of inflationary default. Bond traders realize that while they might get paid back, they will be paid back in dollars that are worth 50% less. So they went on strike. This is what we call a failed auction. When the US Treasury tries to sell new debt to pay off old debt and nobody shows up to buy it, interest rates spike violently. The yield on the 10-year Treasury shoots up from 4% to 6%, then 8%. This destroys the value of the old bonds sitting on bank balance sheets. And this is the exact mechanism that triggered the collapse of Silicon Valley Bank in 2023. But this time, it isn't just one regional bank in California. It is every major bank in the Western world. They're all holding trillions of dollars of safe U.S. government debt that is now toxic. They are technically insolvent, and when the banks are insolvent, they stop lending. This is the credit freeze. Imagine trying to swipe your credit card at the grocery store and it is declined. Not because you don't have credit, but because the bank doesn't have liquidity. Imagine a small business trying to make payroll on Friday, but their line of credit is frozen. Imagine trying to get a mortgage to buy a house and the loan officer laughs at you. When credit stops, the economy stops instantly. Trucks stop moving, shelves go empty, panic begins. This is the 2026 execution phase of the trap. The Federal Reserve has a choice. Option A, let the system collapse, wipe out the debt through deflation, and cause a Great Depression that makes 1929 look like a picnic. Option B, print the money. Print enough money to buy every single bond that the world wants to sell. Print enough money to recapitalize the insolvent banks. Print enough money to fund the $2 trillion interest bill. We know which option they will choose. They have told us they will choose inflation. They will choose to sacrifice the dollar to save the system. This is called yield curve control. It is exactly what Japan has done for decades, but the U.S. is not Japan. Japan had domestic savings to fund its debt. The U.S. relies on the kindness of strangers, and the strangers have left the building. So the Federal Reserve becomes the buyer of last resort. They will double the money supply, then triple it. This is the moment when the crack-up boom begins. Stock prices will rise. House prices will rise. Bitcoin will go to the moon, but you won't feel rich because the price of bread will rise faster. The price of gas will rise faster. You will be a millionaire on paper and a pauper in reality. This is the trap. The $38 trillion debt must be inflated away. Your savings account is the collateral damage. The purchasing power of your labor is the fuel for the fire. And this brings us to the Ice 9 scenario. The moment when the velocity of money gets too high and the system has to lock down. In the next part, we will expose the specific laws, already on the books, that allow the government to freeze your assets during this transition. And we will show you the bail-in mechanism that turns your bank deposit into bank equity without your permission. They believe that if the bank fails, the government will write them a check. This is the FDIC illusion. And in 2026, that illusion is going to be shattered. To understand why, you have to look at the fine print of the Dodd-Frank Act of 2010. Buried in Title II is a provision that ended the era of bailouts. In 2008, the government used taxpayer money to save the banks. The public was furious. So Congress passed a law saying, never again. But they didn't fix the banks. They just changed who pays for the failure. The new law authorizes bail-ins. This means that when a bank fails, it doesn't ask the government for cash. It takes the cash from its own creditors to recapitalize itself. And here's the legal reality that no one tells you. When you deposit money into a bank, it is no longer your money. You have loaned that money to the bank. You are an unsecured creditor. And in a bankruptcy, unsecured creditors are the last to get paid. In the 2026 bond market collapse, the banks will be technically insolvent. The FDIC insurance fund currently has about $128 billion. But there are over $18 trillion in deposits. If one big bank fails, the insurance fund is wiped out instantly. So the regulators will trigger the bail-in. On a Friday night, after the markets close, they will announce a bank holiday. You will try to log into your app, and it will say system maintenance. You will go to the ATM and it will be dark. On Monday morning, the bank will reopen, but your checking account will look different. Part of your balance will be gone. It will be replaced by bank equity shares. Congratulations, you are now a shareholder in a failed bank. You cannot spend shares at the grocery store. You cannot pay your mortgage with shares. Your liquidity has been stolen to save the system. But it gets worse. The bail-in is just the local event. The global event is what financial expert Jim Rickards calls Ice 9. In the novel Cat's Cradle, Ice 9 is a molecule that freezes all water it touches. In the financial system, Ice 9 is a total lockdown of capital. When the bond market crashes and the dollar starts to hyperinflate, capital will try to flee. People will try to move their money out of the US and into Swiss francs, gold, or Bitcoin. The government cannot allow this. It would destroy the currency. So they will invoke the International Emergency Economic Powers Act, IEEPA. This law gives the president the power to freeze any asset, anywhere, during a national emergency. They will impose capital controls. You will not be able to wire money abroad. You will not be able to withdraw more than $100 a day from an ATM. The crypto exchanges, Coinbase, Kraken, will be ordered to freeze withdrawals. Your money will be trapped inside the burning building. They will tell you it is for your own safety, to stabilize the markets. But the real reason is to force you to use the new system they are rolling out. While your old dollars are frozen, they will offer you a lifeline. We can't unfreeze your bank account yet, they will say, but we can deposit your stimulus relief funds directly into a new FedNow wallet. It's fast, it's safe, and it's digital. This is the transition to the central bank digital currency, CBDC. They use the crisis of the breakdown to force adoption of the control grid. If you have your wealth inside the banking system when the freeze happens, you have no leverage. You have to accept their terms. And their terms will be, you can have your money, but you have to spend it where we say, when we say. This is the ultimate trap, the conversion of free citizens into digital serfs. But there is a way out. There are assets that cannot be bailed in, assets that cannot be frozen. In the final part of this documentary, we are going to give you the specific exit strategy. We will show you the 5 assets that smart money is moving into right now to front-run the freeze. And we will explain how to be your own bank before the real banks close their doors. We have laid out the mathematics of the collapse. We have shown you the mechanics of the bond market revolt. And we have exposed the legal trap of the bail-in that threatens your bank deposits. If you are still watching, you understand that the system is broken and it is not coming back. The question now is not if it will happen, but what do I do? The majority of people will do nothing. They will suffer from normalcy bias. They will trust the government to save them right up until the moment the ATM goes dark. Don't be one of them. The window to exit the system is closing, but it is not shut yet. To survive the ICE 9 lockdown, you must move your wealth out of counterparty assets and into bearer assets. A counterparty asset is a promise to pay. A bearer asset is wealth you hold in your hand. When the system freezes, promises are broken. Only physical reality matters. Here are the essential assets for your exit strategy. Asset number 1, physical gold. Look at what is happening right now in December 2025. Gold just crossed $4,000 an ounce. Why? Because central banks around the world are panic buying it. They know the dollar is dying. Gold is the only currency that cannot be printed by a politician. It has survived every empire collapse in history. It will survive this one. Asset number 2, physical silver. Gold is for preserving wealth. Silver is for buying bread. In a credit freeze scenario, when digital payment apps go offline, silver coins become the transactional currency of the people. It is tangible, recognizable, and has immense industrial value. Asset number 3, self-custody Bitcoin. Notice I said self-custody. If your Bitcoin is on Coinbase or Binance right now, you do not own it. You are an unsecured creditor. When the ICE 9 lockdown hits, the exchanges will be frozen by executive order. You must hold your own private keys. Not your keys, not your coins. Bitcoin is now trading over $92,000 because it is the only digital asset outside the banking system. It is your digital lifeboat. Asset number 4, directly registered stocks, DRS. If you want to own productive companies, you must remove them from the street name system held by the DTCC. Use the direct registration system to become the legal owner on the company's books. This removes your shares from the pool of collateral that banks use for their derivatives bets. It protects you from the bail-in. Asset number 5, tangible skills and community. In the worst-case scenario, when financial systems fail completely, your ability to produce value in your relationships with your neighbors become your currency. You cannot eat gold. You cannot live inside a Bitcoin. Resilience is the ultimate asset. The $38 trillion trap has been sprung. The debt cannot be paid. It must be defaulted on, either through inflation or confiscation. They have chosen their path. Now you must choose yours. Will you remain a dependent of a bankrupt system, or will you become your own central bank? The time for theory is over. The time for action is now. Get your money out of their banks. Get your wealth out of their system.